Jack Ablin, who oversees $55 billion in assets at Harris Private Bank, he says he's reduced the firm's equity holdings by 10%. He's holding the most cash that he has in quite some time. Jack, by the way, also the author of Reading Minds and Markets, Minimizing Risk and Maximizing Returns in a Volatile Global Marketplace, which is a Wall Street Journal bestseller. And Jack joining us from Chicago to talk more about what's going on today and what may go on at the end of the week with that jobs report. So, Jack, we had that big sell-off yesterday. Today, it seems like folks taking a step back and trying to consider whether all that bearishness was warranted. Do you think that sell-off yesterday brings us to some more reasonable levels?
Well, you know, it's funny. Despite the fact that we did, as you mentioned, raise a lot of cash earlier this month, it really wasn't on a valuation call. I don't think the market is overly expensive. It's not table-poundingly cheap either, but let's say it's fair value. We've got a price-to-sales ratio, which is my preferred method of gauging the market, about 1.2 times. So we're below historical median levels, but probably where we ought to be, given where we are in the profit cycle. So I'm certainly not saying that the market is overly expensive. And, yeah, if we get a big pullback, maybe we can get to a level that we would consider cheap.
So what was the big impetus behind raising that cash position to 10%?
Well, I mean, Adam hit on a lot of the same issues that we're worried about. Clearly, it's the risk environment, it's the economy, jobs. You know, if you think about a self-sustaining economic recovery, you know, spending creates profits. Profits should create jobs, and jobs should create spending. And unfortunately, that one leg of that stool, jobs, is just not there. And it was a big disappointment last month, and it looks like it's going to follow through probably this month too.
And Jack, speaking of jobs, how do we sustain that? What's the metric? 125, 150,000 jobs a month before we see ourselves climbing out of this?
Well, that's it. You know, I would say we need at least 100,000 jobs a month, Mark, just to get the unemployment rate to go down. And you know, my frustration is we've spent $2 trillion on stimulus and other programs, and we still are mired with a 9.7% unemployment rate.
What's behind that? Because that, as you know, a staggering amount of money to try to, a lot of people, some critics of the administration say, to throw at a problem without seeing any tangible results.
Well, you know, I think that's it. It's the government just doesn't understand that they've got to create an environment that creates companies, and then let entrepreneurs hire workers. And that's generally, if you look back at every recovery that we've enjoyed, it's always been companies of 20 employees or fewer are fueling the job growth. It's not the Boeings and the McDonald's and the Bank of Americas of the world. It's startups. And unfortunately, all of the stimulus that we've seen go by over the last 2 years has really bypassed small business and anything that would have started up a business.
Hey, Jack, let's get back to the markets here. We've got a 14.5% pullback or so in the S&P 500. When do you start to say that this is enough, that it's accounted for all the pessimism that you're talking about?
Well, you know, it depends, Julie. I think there is certainly a lot of pessimism and there's a lot of ugly news. I think the one comfort I take is that what I'm worried about is something that we're all seeing in the headlines. This isn't, I'm not looking at some, you know, secret catalyst around the corner that nobody knows about there. It's out there. You know, so what I'm worried about is pretty much consistent with what anyone else that's worried in the marketplace is looking at. So at least, you know, in terms of the issues that we face and that we grapple with, they're pretty much on the table. So now the question is, what's the path?